We're here on a Friday afternoon and the major U.S. equity averages are in positive territory. But we got a slew of economic data and we've had quite a week. So joining me to weigh in on this week's action as well as the week ahead is Alan Valdes from SilverBear. Thank you so much for joining me, Alan.
Oh, thanks for having me.
Well, Alan, we've been seeing wild swings in the equity markets as well as fluctuations in oil. Today we saw the front month contract for oil break above $34 a barrel, but we'll have to see what happens overall. We also got a warning out from the IMF as well as Citi talking about the possibility of a recession. So given all the fundamentals and all the Fed speeches, what's your take?
You know, I'm with Citibank. I think you could see a recession here later on in the year. I mean, again, oil broke above 35, like you said. We're just trading a little below that. But, you know, the market really is not moving. We're kind of flat. We're up $9. We had good news out. You think it'd see a little push. We will probably be up for the week if it holds here like this. But on no volume, small up. And if you look around the world, it's not just here, but if you look around the world, whether it's China, where SilverBear is located, in Hong Kong, whether it's the U.S., whether it's Europe, everyone seems to have problems right now.
And speaking of problems, this is an election year. So, of course, politicians are paying attention to the economic data. And speaking of politicians and leaders in Shanghai, the G20 meeting has kicked off. Do you expect anything to come out from that?
No, I don't expect anything but, you know, just some rambling talk going on. And the main reason is because everyone's in debt. I mean, the U.S. is $17 trillion in debt. If we didn't print our own money, we'd be in a depression right now. England's got problems. France is in recession, basically. Italy's in recession. Germany, under Merkel's got problems. You see what they're doing in China. They keep devaluing. They have problems. South America, forget about it. They may not even have the Olympics in Brazil they're talking about. So overall, there's not much they can do to address that debt because there's no real strong job market. We say we have 5% unemployment. It's probably more like 20% or 25% when you take everything into consideration. And if they tabulated unemployment like they did in the 30s with FDR, would be about 35% right now. So it's just a fake model. It's broken. But the main thing is there are no jobs. Good paying jobs are hard to find. I don't know where that market's going to come from. As great as the internet is, I love the internet, but it's taken away a lot of jobs. If you look at retail brick and mortar here in America, they're closing up and down. Walmart's closing 129 stores, Kmart's closing, Sears closed, right across the board. A lot of jobs, and it's kind of sad.
Well, Alan, you brought up a lot of important points there, and I almost wish that you could pose questions to all the candidates that are running for the president this year, because that's a lot to digest. But since we're here at the New York Stock Exchange, it's all about investing. So do you see any opportunities anywhere?
Well, yeah, I do. You know, even though I don't see a great year ahead for stocks, I think if you're young like you got a long-term prospect ahead, it is a good time to pick quality stocks. Now, I'm not backing these stocks at all, but I mean, I think if you look at an Apple, if you look at a General Motors, people always be driving. I mean, if you look at some quality stocks, you know, the old adage is if you buy junk, you're going to sell junk. So you look for quality stocks. So a lot of them are on sale. It's like a sale day here, you know. So you look around, you do your homework and pick a good stock, strong stock, and you can go into it. Look for some with good dividends. Some of them are still paying dividends. I mean, you know, they're talking minus negative rates and banks coming up this year. So look for a good dividend play, and you'll be safe. But remember, the long run, don't take this, you know, month by month. Buy a stock, put it away, and walk away.
So, Alan, last but not least, before I let you go, you mentioned your take on the overall market, but in terms of sectors, are you bullish or bearish on any in particular?
Not right now. I think we're going to see turmoil. Like you mentioned, we have an election year coming up. It seems the politicians are more interested in bashing themselves. We don't know, you know, what their real plans are. So that's one thing. And again, the job market's kind of weak, and European markets, who are our biggest trading partner, and most people think it's Asia. Fact is, it's Europe's our biggest trading partner. They're having tough times ahead. So I think, yeah, keep your powder dry, pick your stocks, do your homework, but don't get too deep into the market right now.
Okay, Alan. Well, thank you so much. At least we get to take a breather ahead of next week. So thanks for joining me.
Thanks for having me.